Thanks for clicking! The Bank of Canada has addressed its ongoing cash injections that it's been doing in the overnight repo market. Or, as the media puts it,
I don't know what that is.
Indeed, while CIBC had argued that the bank was injecting cash into the system because some banks were hoarding their reserves, the new report coming from the central bank says that that is not the case. The overnight repos, if you'll remember, began on July 17th at about $10 billion per day and have now reached about $16 billion per day as of the making of this video. And less than a month after CIBC put forward that argument, the bank has put forward a 23-page staff analytical note explaining why the bank has had to suddenly inject so much money. In fact, in the report, the bank actually provides a response to CIBC's argument over the hoarding of cash. As we'll see today, according to the Bank of Canada's report, the bank is not so much helping out those banks which are low on cash, as it is helping hedge funds finance their long-term investments.
How you like them apples?
So what I want to do today is briefly go over the overnight repo market and the bank's cash injections, discuss why the central bank says it's been having to inject cash into the overnight market, and then discuss some critiques. The bank first started injecting cash into the overnight market back in January, stopped, and then resumed them again in July, and has been going ever since. As such, this is an ongoing story which we will continue to track on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into these overnight loans. First off, very briefly, the overnight repo market. As we talked about before on this channel, at the end of every day, a bank could be low on cash but have a lot of collateral, and if it needs that cash, it can go to the overnight repo market, where it trades collateral, usually government bonds, with other banks in order to get the cash that it needs to operate. The bank or counterparty that is low on cash gets the money it needs, and the other bank that provided that cash gets some safe collateral and makes a little bit of money for the overnight loan. Everyone is happy, unless, that is, there's a lack of cash or a lack of good collateral, and the bank that is lending that cash overnight tries to charge an interest rate higher than that which has been set by the Bank of Canada. At that time, Governor Macklem steps in and lends that bank the money for the rate set by the central bank. And the central bank has had to do this a lot over the past month, stepping in, lending almost $16 billion, or exactly $16 billion per day on multiple occasions over the past 4 weeks. And as to why, says the bank, starting in May, there have been a lot more trades occurring in that overnight repo market. So, more banks, more hedge funds, more counterparties have been going to the overnight repo market to borrow money overnight. The increase in activity has been due, in large part, says the bank, to an increasing amount of hedge funds borrowing money from the overnight market. A hedge fund, just as a brief refresher, is a collection of investors that combine their money to invest via an actively managed pool. So, a group of investors get together, set up a pool of investment funds, which is actively managed by a professional, and that hedge fund goes out into the market making investments to try to earn a return.
Thank you for caring enough about our most vulnerable citizens.
And as to why there's been an increase in the number of hedge funds going to the repo market for funding, while it's not overly important for this discussion, suffice to say that there's been an industry-wide decision to shorten the time that banks, hedge funds, and counterparties have to execute and settle bond trades with one another, and as such, it's easier for these funds to access their funding needs in the overnight repo market. So, whereas prior to May, hedge funds had a bit longer of time to conduct their trades between banks, between counterparties when buying and selling bonds, etc., now they have to do so within a much shorter time period, and as such, it's easier for them to go to the overnight repo market. So, what the Bank of Canada is saying is that it's not so much a lack of liquidity in the market, a lack of cash because banks are hoarding it, as it is that there is a new player on the market, hedge funds entering into the repo market, who are demanding cash that is not being lent, and as such, the repo rate is going up, causing the Bank of Canada governor to have to intervene with cash injections. So, what the Bank of Canada is saying is that it's not so much that there's a lack of liquidity in the overnight repo market, just that there is more demand, as hedge funds are increasing their demand for funds. As a result, says the bank, the increase in activity of these hedge funds has largely determined where the overnight market rate has landed since the shortening of the time span on which banks and hedge funds can settle their trades. Now, as to whether or not this should be allowed, with hedge funds getting their money from the central bank, money that they use to buy long-term government bonds. Again, with money secured from the money printer, well, that's up to the electorate. Well, not really up to the electorate, as the Bank of Canada is appointed and serves for a predetermined term, so I guess it's really up to...
Shut the f*** up!
So, according to the Bank of Canada, the cash injections that it's been providing since July have been the result of more players entering into the repo market, demanding overnight cash, not, as argued by CIBC, as a result of some banks hoarding their money. And the bank actually took the time to address this money hoarding argument directly in the paper, noting that concentration of settlement balances among Linc's participants has also largely remained unchanged for quite some time. And looking at this chart, that does appear to be the case, with the top 3 holders of cash maintaining a relatively static share of reserves held at the Bank of Canada over the past few months. And while the bank has been drawing down those reserves via quantitative tightening, getting liquidity out of the system, it does note explicitly in the paper that it does not think that quantitative tightening is the reason the overnight repo rate is heading up. So the bank is being explicit. It's not having to enter into the repo market due to a lack of cash, but rather due to an increase in supply, an increase in the number of hedge funds utilizing the overnight repo market for its funding needs.
Shut the f*** up!
And given that these hedge funds are likely to continue to enter the market depending on market dynamics, the bank says that it may have to amend or create new tools to enforce its policy rate. Now, on to the implications. While I do applaud the bank's transparency, given that seemingly the media doesn't exactly hold its feet to the fire, we're still seeing more central bank intervention into an industry that's supposed to be private, based off some decisions made within the financial industry. Further, the bank says it's having to intervene not due to a lack of supply of cash, but rather due to more demand for that cash. But supply is a function of demand.
Are you serious?
And if there's more demand for cash than there is supply, then that would still indicate a supply problem. And finally, and most importantly, if hedge funds are getting their money to buy long-term government bonds from the money printer, as other banks are not willing to lend them money at the rate upon which buying those bonds would be profitable, then isn't the central bank facilitating government deficits? Isn't the central bank helping to push down the yields on long-term bonds? I think there's a word for that. So, the Bank of Canada has directly addressed CIBC's argument that its overnight repo operations were due to certain banks hoarding cash, noting that not so much. It's more to do with more players entering into the overnight repo market, hedge funds entering into the market for funding to buy up long-term government bonds. Whether or not CIBC gets the message or if we're going to get further details on this story remains to be seen, but suffice to say for now, the central bank at least appears to be almost permanently entering back into the repo market, at a time when the banks still have over $100 billion worth of cash sitting on reserve at the Bank of Canada. As mentioned, we will obviously continue to track this story on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.